This strategy using William percentage R and moving average 14, and the aim of the strategy is to take the trade when there is a pullback. So we will be taking the trade, for example, if the stock is going up and if it is has come down and it is again trying to work, that is the time we are going to actually take an entry. A buying entry, that means our aim is to have a very small stop loss and a larger profit potential. And I said we will be using only two indicators, which is William percentage R and moving average. This is a potential strategy. It is a swing strategy. That means you might be in a trade for few hours, and the time frame that we will be using is 30 minutes. So let me show you some example how this work. So I have added both the indicators. So let me first show you the indicator setting. The first indicator that I have added is moving average, and it is normal simple moving average with a length of 14. And the second indicator that I have added is William percentage R, and again the length is 14. Here you will also notice that there are three more line. There are three more line, and these lines are based on overbought and oversold zone. So the upper line is -20 and the middle line is -15 and bottom line is -80. So those are all the setting. Now let us look at the rule of when we are going to take the trade. So let us say when we are going to take a short entry, a selling entry, when what are the rules? The first rule is William percentage R. You can see that William percentage R has gone below -80. It is gone below -80, so that is the first thing that is done. After that it has come up, that means there is a pullback and it has gone above -50. So now we can say that yes, it has taken the pullback. Now we want to take the entry, but at very perfect time. So the entry will come as soon as we get William percentage R below -80, 50 again. On once it become less than -50 again, then there is a high chance that it will keep going down. So the first rule is William percentage R is below -80, then is pullback and goes above -50, and then the third part is again is come below -50. Once is thus that is the time at the closing of the candle we can take an entry, we can take a selling entry this time, and I have highlighted is there. So on the red candle is where we are getting a selling entry. Our selling entry is coming somewhere around this place at the closing price. Our stop loss will be the previous swing high, so the swing highs become our stop loss. So this is the stop loss, and our target will be soon as the William percentage R touches -80. So when it touches -80, so this is the place where we are going to take an exit. So as you can see, this is a profitable trade. One more thing is where I have added this moving average is when we are taking the entry. When we are taking a entry, selling entry, we want the stock to be below moving average, and when we are taking the buying entry, we want the stock to be above the moving average. This is the just for a confirmation. So as we can see, the first trade is profitable, and most of the time what you will notice is that your risk reward is better than 1:1. So as you can see here, also the stop loss was smaller, the target was larger. So generally you will see your target will be much better than your stop loss, and that is why even if the strategies give you 50% accuracy, you will still end up making profit. But you will notice that the accuracy of this strategy is actually pretty good. So let's keep checking what are the next trade. Now I am showing you the buying entry this time. So for the buying entry, it is opposite. We want first step, we want William percentage R to become more than -20. So it's gone above -20 here. Then we are looking for William percentage R to go below -50. So it has gone below -50 here, and then it goes above -50, which is here. So we can see at the same time this green candle is above the moving average also. So all the conditions are met. That means we can take a buying entry on the closing price. at the closing. Here we are taking the buying entry with the swing at the stop loss, and again as soon the William percentage R goes above -20, we will take an exit. As you can see on the first candle, we got a profit of almost 1:2. Let's keep checking. We get another buying trade here. You can see we get another buying trade here because William percentage R was above -20, came below -50, and then moved again. So we should have taken a buying entry here, but unfortunately this is a stop loss trade, so we will get stop out here. So this trade is the stop loss trade where we got a loss, a small loss. Let's keep checking if we got more trade. I have highlighted all the trade that we have got. You can see here we have got another trade. Let's see the selling setup again. How William percentage R was below -80, it came above -50, and then it came below -50 again. So we should take the sell entry this time. This is our selling price, and this is our stop loss, and it gave us profit here. So again it is a profitable trade. We get a buying entry this time. Why? Because William percentage R was above -20, came below -50, and then become above -50 again, and again at the same time this is above average. So now we are buying here. This is a buying entry with this stop loss, and we got profitable here. You can see this is when it actually goes up. So almost 1:2 risk. We got another trade here. William percentage R was above -20, came below -50, and went above -50 again. We will take a buying entry on this candle with this stop loss, and again we got a profit almost 1:3. We have got another trade here. William percentage R. Okay, this is a selling trade. This is a selling trade. This time you can see here that I was below -80, went above -50, and came below -50 again. So we could have taken a selling entry here with a very small stop loss, and our stop loss got hit. So that is what I was telling you, that this is strategy. Since the stop loss are very small and the accuracy is pretty decent, 60 to 70%, even if it's some stop losses, it is not a big problem. Okay, we have another buying entry here, another buying entry here, because we have taken the entry at the point. Buying entry William percentage R above -20, came below -50, and way above -50. At the same time the candle is above moving average, so we are going to take a buying entry somewhere here with this as the stop loss, and our target somewhere here. It hits because William percentage R become more than -20. Okay, let us see if we have got any more entries. We have got one more entry here. Selling entry William percentage R less than -80, then above -50, and then below -50. This is the time we take the entry because it is also below the moving average within a stop loss, and we got the profit here. Again 1:2 trade. So our risk was 1 rupees and our profit was 2 rupees. If you found this strategy helpful, don't forget to like and subscribe.